Alright everybody, welcome back to another video. This is Teresi Banks, so if you've not subscribed to our YouTube channel, please do to subscribe anyway. So I hope the content has been very educative. So the previous video we were talking about like market structure, where we said different things that you should look out for if you plan on buying the market, right? So now on this video we're talking about the sell POI, which is, what is POI? POI is a point of interest. So the sell POIs, we'll be talking about it on this video for a market structure, which is the continuation of the last video. So stay tuned. All right, so for the sales, there are key things that you need to look out for when you plan on selling the market. I'm going to draw the patterns for you guys. This was for the buys that I did, so they'll cancel that. So I'll show you guys for the sales. Now let's do this. So for the sales, markets must create a high, then a low. The markets must create a pullback to create something called a lower high. Then a lower high is a high that is not, that is lower than the previous high. That's the hack. Market then comes down to create something called a lower low. Now a lower low is a low that is lower than the previous low, which is the start of the trend. Market then creates another pullback to create a new lower high, then comes down to create a new lower low. Now what just happened? We have a break of structure 1 and a break of structure 2, which confirms the continuation in trend of the sales. Now where is your entry? Now your entry gets here. Now what you'll be expecting now is you'll be expecting market to push up price slowly. Push up price. You cannot expect market to just push up price immediately. Boom. Slowly. It might take 2 days, it might take a day, it might take an hour, it might take 2 hours. So you want to make sure that market is slowly pushing up price towards your PY. Now the hack is you're not expected to just sell at the previous lower high area, then set your SL at this one. So markets can decide to react from either here or here. So you want to make sure that your entries is in between these two POIs while you retain your stop loss at this high. Are you guys with me now? So then what that happens is market creates this, market pushes up price into this POI area and sort of reacts by pushing down price to create a new lower low. Now your stop loss remains at this high. Your entry is in between these two lower high areas, not just one of them, so that you don't set your entry here and your stop loss is now here. The market pushes up price to kick you out, they now retest all the way to the downside. So I'll show you guys also chart patterns that sort of represent what we just spoke about. On this particular video, I'll just be showing you guys one particular chart representation and all that. So pay attention to this, guys. Now if you look at this closely, markets created a high here, then it created a low here, which is the first one, breaking this other structure that's so tiny, and this is on a 4-hour time frame, which means on a lower time frame it will be showing something bigger. The market sort of like pushed up price to create this. That's why I push down price all the way here. Now no matter how long it takes, that's why I told you that you need to pay attention to those entries that show you you need to pay attention to those entries that are basically showing at the start of a trend. This is the start of a particular trend, not these areas in between them. Now you then have market pushing up price back into this region that is here, and then what did we do? We have an instantaneous sell to the down side. Now look at this, guys. So market created a low here, then it created this high, then it pushed down price to basically break structure around here, right? Upon breaking structure, market sort of created all of these pullback regions that are here, and after that it pushed up price into this area that is here, right? And what did it do? You had an instantaneous retest all the way to the downside, which was the first one, right? So which means you would have been able to get this, right? But if you had retained your SL some sort around this region, price wouldn't have pushed you out. What you would have had is market pushing up price into these particular areas that are here and then reacting because this is actually a high, right? Market first created a low, then a high, then it now pushed down price to create all of these liquidities that are inside, right? So after creating this low, market then has to push up price, killing all of these regions, then going back to this high. Now what I need you to pay attention to is that if you are looking at basically buying, let's look at this pattern. Market created a low and pushed up price, created this region that is here, then push up price again, create a break of structure, push down price, then push up, right? If you are looking at buying, you're not expected to basically buy in between. Your entries should actually be at this particular POIs. Why? Because you are expected to basically buy at the starting of that trend. So if there was any buy POI inside that trend, it is not your business. The business that you have is those major complex pullback areas. Like this area can be your first POI area. These two regions is your first POI, is your POI areas. This one and this one here, while you retain your stop loss at this low, right? And then you should see some sort of solid reactions. Then for the sales, to sum this up, you should have market creating a high, then a low. Market pushes up price to create a retest, pushes down, create a vertical structure, push up price again, then push down price, right? You don't have any business, any sales in between this particular trend. You are expected to look at market retesting back to the start of that trend, which is basically the highs that were here that are solid enough. So expect market to sort of sell between those highs that are here, and you retain your stop loss at the major high. Then you should see a solid reversal to the downside. So that's it on today's episode of market structure. So I hope that this video is able to help you see the market in a very, very different way. All you basically have to do is anything you find yourself doing, be consistent at it. So which means this is enough for you to actually sit down and do a bit of homework to study the market, look at the charts differently, try and look at that. Okay, this person actually took out their time to do this for us. Let's look at what we sort of can learn from it and then develop something that works for you, right? So I hope this has been able to help you guys. And please don't forget to hit the subscribe button if you haven't done that already, and also share this video to as many people as you can. So bye for now, and I'll see you in another video.